Yeah, now. Good morning, Karthik. Good morning, Parvati Aditya. Good morning. Tejashwini, good morning. Okay, shall we start question number 13? Question number 13. Good morning, Sairam. Good morning. Lakshmi Prasanna, good morning. Question number 13. Sun Moon Mutual Fund approved mutual fund sponsored open ended equity oriented scheme Chanakya Opportunity Fund. There were three plans. Plan A, dividend reinvestment plan. Plan B, bonus plan. And Plan C, growth plan. At the time of initial public offer on 1/4/1999, Mr. Anand, Mr. Bachchan, and Mrs. Sharu, three investors invested rupees 1 lakh each and chosen B, C, and A plan respectively. The history of the fund is as follows: the date, dividend percentage, bonus ratio, net asset value. On 31st July 2009, all three investors redeemed all the balance units. Calculate annual rate of a return to each of the investors. Consider long term capital gain is exempt from income tax. Short term capital gain is subject to 10% income tax. Security transaction tax 0.2 percentage only on sale or redemption of a unit. Ignore education cess. Ignore education cess. Okay. There are three plans. How many plans? There are three plans. Plan A, dividend reinvestment plan, and Plan B, bonus plan, and Plan C, growth plan. The question is we have to find out annual rate of a return to each of all the investors. Okay, shall we start? A dividend reinvestment plan. Dividend reinvestment plan means instead of distributing dividend among the unit holders, dividend will be reinvested. So additional units will be issued to the unit holders. Additional units. And bonus plan is nothing but instead of distributing dividend, okay, additional bonus units will be issued. It is similar to bonus shares. Similar to bonus shares. Growth plan means no dividend, no additional units, but NAV will be increasing. That means number of units in the beginning and at the end will remain same. Okay. So first we shall start with dividend reinvestment plan. We have to find out annual rate of a return to the investors. So who are the investors? Investors are Mr. Anand, Mr. Bachchan, and Mrs. Shah. To confuse, they have given Mr. Anand has chosen plan B. Mr. Bachchan has chosen plan C. And Mr. Charu has chosen plan A. Okay, to create confusion. That's it. Okay. So ignore the names of our investors. We shall go according to the plans. So we shall start with plan A. What is the plan A? Plan A is the dividend reinvestment plan. And next plan B and then plan C. Okay. Shall we start? Plan A. So we have to find out annual rate of a return. For finding out annual rate of a return, first we should find out holding period return. How do we get holding period return? NAV1 minus NAV naught plus income divided by NAV naught. Yes or no? So NAV1, nothing but NAV at the end is given already 53.75. NAV naught. So they have invested 1 lakh rupees. Nothing has been mentioned in the question. So that's why we assume the issue is made at face value, that is 10 rupees. So NAV at the beginning is equal to 10 rupees. What about dividend? The dividend is not received. Dividend is reinvested. Dividend is reinvested. So when the dividend is being reinvested, we cannot use this formula for holding period return. Holding period return is equal to NAV1 minus NAV naught plus income divided by NAV naught. This formula cannot be applied because income is being reinvested. We cannot find out holding period return on per unit basis. On per unit basis because dividend is being reinvested. Dividend is being reinvested. So that's why what we have to do. So we have to find out holding period return on total basis. Nothing but the formula we have to take is value of investment at the end minus value of investment at the beginning divided by value of investment at the beginning. Okay. So we have to ignore income because income is being reinvested. So for finding out value of investment at the end, so we have to know number of units at the end. Yes or no? So number of units at the beginning is equal to 1 lakh divided by 10. That is 10,000 units. Okay. But number of units at the end will increase or not? Number of units will increase because dividend is being reinvested. Okay. So that's why. So first we have to find out number of units at the end. Clear? Shall we take working note 1? Working note 1. Question number. Question number 13. Question number 13. Yes, nothing has been mentioned in question, so that's why we assume it as 10 rupees. Okay. So first working note 1. Question number. Question 13. Question 13. Working note 1. What is working note 1? Calculation of number of units at the end under dividend reinvestment plan. Calculation of number of units at the end under dividend reinvestment plan. Under dividend reinvestment plan. Okay. So columns. Date, first column, date, date, dividend, or else date, number of units, number of units at the beginning. Number of units at the beginning. Dividend, number of units bought, closing. First time you may not be able to guess what are the columns to be taken. So date, number of units at the beginning, dividend, number of units bought, and closing units. Okay. So what is the first one date? What is the first date? 28/7. So even before that, on 1/4/1999, number of units bought were 10,000. Number of units bought were 10,000. Okay, the dividend nil, units bought nil, and closing units are 10,000. And next, what is the next date? 28/7/2003. So number of units at the beginning. So number of units 10,000. The dividend received. Dividend percentage is always applied on face value. Yes or no? So 10,000 into 10 into 20 percentage. 20,000. This 20,000 rupees is reinvested on 28th July. So reinvestment is made at the NAV on that particular date. Yes or no? So 20,000 divided by how many units are you going to get? How many units are you going to get? You're going to get 20,000 divided by plan A. Plan A NAV is equal to 30.7. Yes or no? So that's why 20,000 divided by 30.7. So number of units bought. How many units? 651.46. Overall 10,451.46. Yes or no? 10,451.46. Sorry. 10,651. 10,651.46. Okay, done. Yes, Parvati. Next. After 28th July, what is the date? 31st March 2004. On 31st March 2004, we have how many units? 10,651.46 or 47. What is the amount of dividend we are going to get? 10,651.46 into 10. Face value is 10. into 70 percentage. 74,760. 74,760.26. 74, 560.26. How many units are you going to buy? 74,560.26 divided by 74,560.26 divided by 58.42. How many units? 1 2 1276.28. 1276.28. Total closing units. 75. Number of units at the end. Opening plus units bought 10,651.46 plus 1276.28. How many units? Closing units. 1 11927.74. Yes. Number of units into face value into dividend rate. How can we apply dividend rate on number of units? Dividend rate, it has to be always applied on face value. So 10 rupees into 70%. Nothing but 7 rupees is the dividend per unit. Total how many units are there? 10,651.46. Okay, what is the next date? 31/10/2007. How many units? 11,927.74. 11,927.74 into 10 into what is the percentage of dividend? 40 percentage. So the amount of dividend 47,711. How many units are you going to get? 47,000. 47,711 divided by 42.18. 1,131. 1,131 point overall closing units. 1131.19. Closing units 13,000 50 13058.93. In CMA final new syllabus, only questions are being asked for 7 March. Okay. Similar kind of a question will may be asked in examination, but they might give less number of dates. Instead of giving 5 6 dividend percentages, they might give only 2 to 3 dividend percentage. Okay. And next, what is the next date? 15th March. So 15th March 2008. How many units opening? 13,058.93. So what is the amount of dividend? 13058.93 into 10 into what is the percentage? 25% what? 15th March is the rate of a dividend. 13058.93 into 10 into 25%. What is the amount? 32,000. So 32,647 divided by 46.45. 702.85. Closing unit. Closing number of units. 13761.78. What is the next date? 24th March 2009. Because on 31st March no dividend declaration is there. So 24th. What is the date? 24th March 2009. 24th March 2009. 13761.78. Okay. How many units? How much dividend is received? 13761.78 into 10 into. This is the amount of a dividend we receive. 55,000. 55,047. 55,047.12. And how many units are we going to get? 55,047.12 divided by 48.1. Double one, double four. 1144.43. Closing number of units. One four nine zero 6.21. So these are the closing number of units. Under which plan? Dividend reinvestment plan. In the beginning we have only 10,000 units, but so every time we invested dividend. So that's why the closing number of units are 14,906.21. Clear? Done. So this is working note. This is not the main answer. Calculation of a number of units at the end. Okay. Next working note 2. Working note 2. Number of units at the end under bonus plan. Number of units at the end under bonus plan. Okay. Columns date, columns date, opening units, bonus units, closing units. Date, opening units, bonus units, closing units. What is the first date? 1/4/1999. How many units were bought? How many units? 10,000. Okay. Next, what is the next date?
Which the bonus ratio is given, sir. So next date is 31st March 2004.
Yes, 31st March 2004. Bonus issue is made on 31st March 2004. So what is the next date? 31st March 2004. Opening units 10,000. Bonus issue. What is the bonus ratio? 5:4. That means for every 4, 5 bonus units are issued. For every 4, 5 issued. Okay. So 10,000 into 5 by 4. 12,500. Closing are 22,500. Closing 22,500. Clear? What is the next date?
31st March 2008.
31st March 2008. 22,500. What is the ratio?
Next 3.
So into 1 by 3. 22,500 into 1 by 3. So 7,500. So total 30,000. So what about next date?
24th March 2009.
24th March 2009. 30,000. What is the ratio?
Next 4.
30,000 into 1:4. So that is 7,500. So closing units 37,500. Yes or no? Is there any other bonus issue? No. So number of units at the end is equal to 37,500. Number of units at the end is equal to 37,500. Clear? Done? This is working note 2. What about growth plan? In growth plan, number of units in the beginning and at the end will remain same. So that's why we need not go for working note. Clear? Now, we shall come to the main answer. Calculation of a annualized rate of a return. Dividend reinvestment plan. Okay. So this question you have to practice. This is a self-examination question. Sale value of a unit. Under dividend reinvestment plan, how many units are sold? On 31st July 2009, total 14,906.16 units are sold at the rate of 53.75. Yes or no? So the realization is equal to 8,01,206. Clear? 14,906.16 into 53.75. So this is the realization. Minus security transaction tax. Security transaction tax. What is the rate? 0.2%. So after payment of a security transaction tax, we are left with 7,99,603.69. After payment of security transaction tax, this is the amount we realized. Long-term capital gain is exempt from tax. Mentioned in the question. Long-term capital gain is exempt from tax, but short-term capital gain is subject to 10% income tax. Ignore education says. Short-term capital gains tax. Short-term capital gain means if investment is sold in less than 1 year, then short-term capital gains tax will be applicable. Here the investments are being sold on 31st July 2009. Okay. So the latest purchase, the last purchase we made is on 24th March 2009. So 24th March 2009 means April, May, June, July. That means within next 4 months we are selling the investment. That means short-term capital gains tax is applicable. So that means for the units which were bought on 24th March, short-term capital gains tax is applicable. What about the units bought on 15th March 2008? For the units bought on 15th March 2008, short-term capital gains tax is not applicable because investment is held for more than 1 year. Only if investment is sold within 1 year, short-term capital gains tax is applicable. So that's why we are finding out capital gains tax only on capital gains tax is levied only on 1144.43 units. That means only the units which were bought on 24th March, only on those units the short-term capital gains tax is applicable. So that's why 1144.43 into we are selling at 53.71, sorry 75. We are selling at 53.75 and the cost of acquisition is equal to 48.1. So the capital gain is difference between 53.75 and 48.1. So 10% is the short-term capital gains tax rate. 647 is the short-term capital gains tax. Are you able to understand this point? So net amount after payment of a tax is 798,956.69. Our investment is 1 lakh at the beginning and we are able to realize 7,98,956.69 at the end after payment of all taxes. That is security transaction tax and short-term capital gains tax. So how do we get rate of a return? Investment at the end minus investment at the end minus investment at the beginning divided by investment at the beginning. Then you will get holding period return. But we have to find out annualized rate of a return. How do we get annualized rate of a return? Into 12 divided by n into 100. For conversion, we need to multiply with percentage, 100. Are you getting my point? What is the investment value at the end? Investment value at the end is equal to 7,98,956.69 minus investment value at the end is equal to, beginning is equal to 1 lakh divided by 1 lakh into 12 divided by 124. Why 124? Because investment bought on 1/4/1999. We are selling on 31st July 2009. 1999 to 2009, 10 years. Up to 31st March 2009, 10 years. 10 years means 120 months. Plus April, May, June, July. Total 124 months. So we are converting the holding period return into annualized rate of a return. So that's why 7,98,956.69 minus 1 lakh divided by 1 lakh into 12 divided by 124 into 100. So 67.64% is the annual rate of a return. Done. Similarly, in case of bonus plan, number of units at the end 37,500. 37,500. Annualized rate of a return under bonus plan 37,500 into NAV on 31st July is equal to 22.98, right? So 37,500 into 22.98. 8,61,750. You have to pay security transaction tax. security transaction tax at the rate of 0.2%. So net amount received is equal to 8,60,026.5 minus short-term capital gains tax. Cost of acquisition for bonus units is equal to 0. Cost of acquisition for bonus units is equal to 0. And the latest purchase, the last purchase is on, so the last bonus issue is on 24th March 2009. Okay. So it has been sold within 4 months. That's why only for 7,500 units, short-term capital gains tax will be applicable. What about 31st March 2008? 31st March 2008 means more than 1 year. So that's why short-term capital gains tax is not applicable on the units bought on 31st March 2008. Clear? So that's why 7,500 into, we are selling at 22.98. Cost of acquisition is equal to 0. So that's why direct 7,500 into 22.98 into 10% is 17,235 is the short-term capital gains tax. In CA final study material, you will find two solutions. One is cost of acquisition 0 and another is cost of acquisition NAV on 31st March, so 24th March 2009 will be taken as a cost of acquisition. NAV on 24th March 2009 will be taken as a cost of acquisition, but that is not correct. In CA final, two solutions are given. So correct answer is cost of acquisition is equal to 0. So this is the net amount realized. What is the net amount realized? 8,42,791.5 minus investment at the beginning 1 lakh divided by investment at the beginning into 12 divided by 124 into 100. So what is the percentage? 71.88 percentage. Under dividend reinvestment plan, annualized rate of return is equal to 67.64, but whereas under bonus plan, what is the rate of return? 71.88 percentage. And third one is growth plan. Under growth plan, number of units in the beginning and at the end will remain same. Number of units at the end will also remain same. So that's why 10,000 into NAV on 31st July 82.07. So that's why 10,000 into 82.07. So 82 lakhs. Sorry, 8,20,700 minus STT, security transaction tax. So net amount realized is equal to 8,19,058. So annualized rate of a return is equal to 8,19,058 minus 1 lakh divided by 1 lakh into 12 divided by 124 into 100. In this question, special point is security transaction tax. It has to be paid. And next one, short-term capital gain. Okay. In case of a growth plan, short-term capital gain is not there because no additional units are issued. Units at the beginning and units at the end are same. Is it clear? Let me know. Is it clear? Let me know. Consider this question as a self-examination, and after this one, try question number 14, which has been asked in CA final May 23. May 23 question. So little bit complicated. You have to find out missing figures. I request everyone to try question number 14. First thing, annualized rate of a return. Are you able to understand? Let me know. Jamuna V, Shilpa, okay. So after question number 13, first you practice question number 13 and then try to solve question number 14 as well. I'm not comfortable with YouTube, okay? So tomorrow, again, I will explain this question in RBCC app, okay? Done. So practice this question and then you practice question number 14. CA final question. Because CA final past questions are being asked in our CMA final. So that's why we can expect that question number 14. So please do practice that question, okay? Clear? Thank you.